It's the start of November 2019 here at Henssler Financial, and despite the overall economic picture remaining little changed from October, we found three important things to focus on in the market this month. Number one, the consumer. The consumer continues to be one strong point in the U.S. economy as one of the largest contributors to the somewhat weak advance reading of third quarter GDP. With no Fed meeting in November, the consumer will remain in focus. Retail sales, personal income data, and consumer confidence will all be released in the coming weeks and should provide a more current view of the consumer and their attitudes. If the labor market can continue to hold firm after a decent October jobs report, the consumer should hold up, which could be key in sidestepping a near-term recession. Number two, earnings. Earnings season has progressed considerably since our update last month, with more than 3/4 of S&P 500 companies having reported third quarter results. By the end of the month, Q3 earnings season will be wrapped up and we'll see just how much earnings contracted. Before earnings season started, consensus estimates according to FactSet showed an expectation for a 4.1% decline in S&P 500 earnings in the quarter. So far, however, earnings have contracted just 2.7%, with 76% of S&P 500 companies reporting a positive earnings surprise, while 61% reported a sales surprise. Number three, manufacturing. The manufacturing sector of the economy continues to be a concern. The October ISM Manufacturing Index remained in contractionary territory for a third straight month, registering a reading of 48.3. Despite the overall decline in manufacturing, the employment component is holding up, suggesting that even though businesses have turned more pessimistic, they have not yet been laying off workers or aggressively cutting hours. Global demand remains soft as lingering effects of tariffs take their toll on global trade. Perhaps some additional progress is made between the US and China in November, and we get some improvement in the coming month. And that's been your Market Minute for the month of November. Thanks for listening.